Hey everybody, welcome back to Markets and Sectors. My name is Mike Fairborn, and folks, hey, we got a few things to look at today. Talked a little bit about this yesterday in the Think Script class, but I've often heard that phrase, sell in May and go away. Some people have used that in the past. It is interesting, but there are a few components to look at just to see maybe where expectations might arise, upside or downside. We're going to take a look at both of those today. We've got some stocks to look at. I'm going to pull up even the earnings gap and go, seeing what's been happening. We are in earnings. I want to know what has moved on earnings, what's beat earnings expectations, and then what prices have actually moved. It's difficult to keep track of all those stocks out there, so we will tap into that as well as diving into some other sector analysis too. So, look forward to it very much, and hope you guys are having a good week in the markets. We are here. It is Friday though. Fantastic. And let's see. Yep. Any questions, comments, throw those in the chat so I can help address those for you all. And Wacky JV Texan. We found out we did have a few Texans. Now it's in the name JV, but we've got a few folks from the great state of Texas here as well. So welcome to all of you here. Hello to you, Greg. Let's see. Yena as well as Michael, Kelly. We got Lego Ninja Warriors. Fantastic, as well as John. How's it going, John? Robert, Bob, and Life in the Fast Lane. All right, well, with that, let's hit some disclosures. I got plenty to take a look at today. So looking forward to it. All right, folks. Information here, materials intended for general information purposes, informational and education purposes only. Now, equity and index options carry high level of risk. They're not suitable for all investors. Spread trading, which we will be looking at today, must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. Papermoney software application is for education purposes only as well. Investing involves risk, including the loss of principal, and for some products and strategies, loss of more than your initial investment. Now, a look at the futures right there. Futures and futures options trading involves substantial risk, not suitable for all investors. We just look at the charts in this class. By the way, it does state past performance, no guarantee of future results. And finally, our last disclosure slide before we dive on into things here. All right, take a look at that. There is a mention of the stacks. We don't quite have the stacks open just yet and ready to go. But what we'll do is we will just start off with the S&P 500 index. So let's dive on into it here and now and take a look at a few things as we are looking at prices. Yeah, holding above that 7,000, folks. And what have we done? We have simply gone into a sideways channel. Now, all else equal, I did bring up the sell in May and go away, and I want to take a look at that in just a second. But we got to compare and contrast some indicators, some internal behind the scenes indicators, just to see what the strength looks like. Now, in terms of price action, we're getting it. The RSI, which can be a short-term indication of an overbought, it can give us that short-term overbought indication, which it's doing. We are, in that upper range in here. You can see it spiking into red right there. One of the keys is though is you'll notice sometimes too. RSI does. It's also an indication of price strength. Strength can be there too. How many times have you seen this? Like over here, let me just use this as a good case in point. You see the price spike over here? Yeah, we did hit the 70, but you know what? We did keep going. And by the way, that wasn't the first time we hit it. It was actually down here as well. We're just using a 1-year chart, but this was actually a strong upward move where we hit that level, consolidated, maybe short term, we pulled back. And that's what we were saying is that with this signal here, perhaps, and sometimes what you do get is a pullback. Now, would that make sense? Have we seen this before? Have we seen a strong breakout where prices come back down and rest upon possibly a big level? That happens to be 7,000. We were there for a little while. We've seen that happen. This could fit because it's a short-term overbought signal. Now, right now, what are we doing? We are, in fact, going up, as it stands right now. Let's do this. I'm going to just bounce into the market posture real quick so we could just see this from a big picture perspective. It's always helpful to see the market relative to these moving averages, the 50, 100, 200, right there. And we've got it. Are we above those? Clearly. What I wanted to really look at, though, is the weekly, and we hit that in our market posture just to get a general idea as to where we're at. And we're seeing that strength here. Now, sometimes when you break above the weekly, back up above it, you can go for a while. That's the weekly chart. Notice over here, right here, look at this. We broke above, let's say the 50 back above the 50. And in this case, I'm sorry, that's the 10 and that's the 40. We broke back to above. Folks, it was a stretch of a run. We did it down here again. It was a stretch of a run. Now, who's to say we couldn't get another stretch again? We did break some highs, right? Just like we broke highs over here after we broke. It's not too uncommon. Do you see it? Right? Do you see it? We broke above, we came back up, kind of held that level. We did test a little bit right there for a few bars. Those are a few weeks. We are on the weekly chart again. And then, folks, we did rally higher. Now, this is the question. Will we see it rally? Would it be unusual to expect a pullback here? No, not really. Not really. So I want to look at a couple of other indicators. Let's just get back to where we were over here. SPX. As we look at this, I think it can be very, very important, and this is really, really helpful. Now, there is an ETF for the S&P 500. We don't talk about ETFs in this class, but what we do talk about, because we did read the disclosures, is the ES. And remember how we talked about the money flow. Is it accumulating or distributing over a period of time? And that's what that money flow can help us with. I'm going to kill that line right there and just take a look. I'm not really too concerned about the RSI. Let's just make this bigger here. One of the key things is the way traders will use that money flow because it's accumulation. Sorry, I can't spell it all out. That's a big word. It really is. And distribution. DIST. You got both. Could it go up or down? You see negative divergence, positive divergence. What you want to get though, if you anticipate the trend going higher, you want money flow accumulating when the trend is up. And you're seeing that right now. Did we take out a new high on price? Folks, you know it. We've been talking about it for a little bit. We did it right there. Over here, did we take it out? Yes, we did. We took it out. That shows an accumulation. Now, this is an interesting read behind the scenes because it says we might have had small volume, but if you can get money flow increasing, it's another read on it to see it, as volume's going up with prices. Because if I go over here and I just simply do this, oh, you know what I'm going to do? Let me switch now. Everybody good with me on this thus far? You can see it accumulate. In other words, you want both trends to go in line. Like over here, if you're getting higher highs and higher lows on the market, you want to see the same thing here on the money flow. Check, we got it. But using the same uh, volume that's being accumulated here, if I go to my market sector review, I do have it listed already here. I do get the volume listed for the ES, as you can see. Now, volume clearly below this level. It doesn't look great. Okay, it doesn't look great because, we had bigger volume coming down, you could see. And then this yellow line here is a moving average of a 50 period. I made it yellow and I made it very thin so you could see behind the scenes. And we had a lot of days that were quite low, but guess what? Not every day was low. In fact, some of our bigger days, think now about the MF. And no, I'm not talking about my initials. I'm talking about the money flow accumulation. It can accumulate and it will show signs on these bars too. That was a big bar. Those are big days. Now, if you look over here with me, that's all up. Yeah, this counts. And that was a big, big day. And that can positively impact money flow. Okay. And some of these days over here, impact, money flow, money flow, money flow. So collectively, is money flow going up? Yes, it is. That's actually a positive because, forgive me for a second, but I got to zoom over here real quick. Look over here with me as we take a look because we got everything on this deck. We just got a lot of stuff. But look over here. The sell-in man go away. Last 10 years. Now there's a big influence out there. That big influence happens to be post-COVID and post-tariffs that lifted this up. We did a review earlier this week where we saw a lot of companies, a lot going down in May. A lot of years were down in May, more years than not, but if you add it all together, it's actually showing strength. Take a look. I got to show it in this class because that's what we do here. I'm just going to do an appearance and I'm just going to look at those yearly numbers right there. Do you see it? Okay, so there you have it. So there is your May. And what are we getting in May? Lower, lower. There's definitely a few ups. You got lower, lower here. I'm just looking at the years and trying to manage them. That's kind of sideways and sideways. It's you might have like maybe four of the years though that went up actually. So in reality, we did get some years going up too. But if we're looking at the weight on each of these, it is interesting. Could go either way. So the sell in May and go away, as we've talked about, we really don't know if that's going to happen. We're seeing actually signs of strength in terms of that money flow indication. Now, the other key component, we looked at volume, right? We looked at volume. We said, hey, volume on the volume bars don't look great, but there were some spikes that are really helping out the money flow. The other thing that we need to look at is breadth, because breadth can also be an indication of trend strength as well. And that is just the basket of stocks out there. How are they doing relative to the S&P 500? Well, a great basket to take a look at right there. Advanced decline line off the bottom. We'll pull it up, make it big. That's the NYSE. Now, the NYSE, as you can see, is holding up towards right there. We did actually break above some highs. So advancers versus decliners, NYSE, about 2,700 stocks. And with that, we're getting a larger basket, and that's exactly what we're looking for. How are the majority of stocks doing? Because this can be a precursor to market moves going higher as well. That's the advanced decline line. You can see it right there. We are going a little bit flat, but we did break above highs. So this is actually, I did put a check mark in there, as you could see. Right? Pretty clear. There's a check, and we could extend higher from here. That's the question. We are again, too, as we look at the markets, kind of flagging. So right now, volume and breadth are actually both positives. Now, one thing that would influence, it's kind of a hit and miss a little bit as we go through. I mean, just a few things to look at. A lot of times when you break higher, it's not unusual to go sideways or down a little bit. We are going sideways though. So we've already got some of that in this market. And that might be it before another run. We don't know, but we're watching this McClellan oscillator. A lot of times, Tom McClellan, when he looked at this, if you get plus above 100 and then below the plus 70, distinguish that from the minuses down below here. He will say frequently, again, that is a 2 to 3 week time frame of, it doesn't have to be a reversal, but it can be a consolidation. We got it off the bottom and it worked nicely down here. I did a whole discussion on this in one of the classes we talked about right there. You can see that. That was a 2 to 3 week rally, but it can work the same way off the top. Case in point right there. I mean, I don't want to just go back and cherry pick, but it did it go down? Well, it kind of went sideways to down right through there. Okay. But it's really kind of a 2 to 3 week thing, at least is what he says, at least. Okay. Let's see. Zig says, do you know, okay, do you follow IBD's follow through day system? Would be interesting. I don't actually follow that. Appreciate you bringing that up. There's a lot out there. That would be a fun one to I could take a look at it, but very interesting. Riceberg. Okay. Right. You made it though. Great. Garage sale crap. Perfect. All right. Well, with all that, yeah. So with all that, folks, what I wanted to do was so we reviewed this. By the way, a quick note: the summation index really showing some good strength right here in terms of just that upward direction. Now, will it continue to go up? That's the question. Even if you were to get a slight pullback, oftentimes it still stays up. Okay, it can stay up. It really does depend, and it is based upon the NYSE. Remember, these are all NYSE based. So sticking with our breadth indicators, as you can see over here, every one of these does look at the NYSE. So in terms of breadth, there we go. I did want to continue on though. on the topic of market breadth because we didn't want to take a look at the EW there. The EW, and that would be the SPX EW. I'll throw that into the chat. I think many of you have it already, but it's a good way to look at equal weight so that what we're seeing is every one of those market sector boxes, yeah, they're going to be equal instead of the market weighted index, which is the S&P 500. If we had all these boxes the same, you would see the chart look like this instead. Now, we don't have a breakthrough here, which is interesting. So the larger basket of stocks, the NYSE, we did see a bit of a break. In fact, I can actually pull it up too. Let's just double check. Let's see. The stock itself. Oh wait, it's somebody help me here. If you can remember in the chat. I would like to take a look at it specifically. We were looking at the advanced decline line, which is a good internal read. But if you've got it, let me know. I'll throw it in real quick to take a look at it. But there you go. So we didn't get a new high. You know where we did get a new high? We got a new high right there. If I can get to it. There we go. This is the NDX. This is our read on the NDX. This is a comparison line. And that right there, that symbol, NDX, and it's kind of a long one. You can see where I'm just highlighting it just above my pencil right there. That right there, that is the market weighted NDX, the NASDAQ 100 that's market weighted. So all of those blocks are the same, and that's what you're getting right there. So it is breaking highs. Now, this is tech heavy. So the breadth of tech, at least in the NASDAQ 100, is showing some strength in there. And by the way, we're still breaking out again. I got to zoom back here a little bit. So let me just do that again real quick to our next one. All right. So let's piece all this together here in just a second. Again, the Hindenburg Omen, looking at a weekly chart, didn't see a lot there. We had a number of different spikes, but we made a new high. That's canceled out. Okay. Over here, in terms of NYSE new highs, not getting a lot on the NYSE new high list. NYA is the comparison. So it's interesting that the advanced decliner, sorry, I got to get back to it real quick. So let me just try this. NYA, NASDAQ or NYSE Composite Index didn't break above the highs just yet. What's interesting is we do have more advancers than decliners. So internally, internal strength is there. But this looks a lot like the SPX EW, telling us that what's keeping the market higher is we look at the SPX. You know what's keeping it higher? These companies that are overweighted. And we know that these companies have begun to run. So breakouts specifically across the board in these stocks. Here it is. There you go with Alphabet. Alphabet actually approaching that high. Here is a look at the Mag 7 though. There's the combination of the Mag 7. How are we doing on the combination? Oh, gotta link it. Here we go. No, it is linked. Oh, that's didn't want to do it. Oh, it's not. Okay, never mind. I'm in this one. We'll get that linked up. Now it's linked up. Okay, there it is. So, yeah, it's kind of more of a flag position. If you're looking at the combination of all of those added up together, there is that ETF for it, but we don't talk about ETFs in this class, but you can see the flag right there with a possible, setup moving forward. Now, I wanted to take a look at this today as we look at potential stocks, but a couple big movers in this area that we saw actually this week. We did see, let me just do this real quick. If I go ahead and take a look at AMD, well, AMD gapped up huge today, and so too did Intel. As a quick note on these, that's a really big gap. Sometimes, one of the big gaps out there is going to be an exhaustion gap. Exhaustion gap. And the exhaustion gap is where it kind of just shoots up big. But I mean, what you're getting here is there's just this kind of CPU renaissance. It's driven by massive demand for AI intelligence, artificial intelligence hardware. So we're seeing the CPUs being driven higher. We don't know if that's going to be exhaustion gap, but sometimes after a big move like this, I mean, it could be a measurement gap. If it's a measurement gap, you'd be looking at something like this, which has been popping up in the markets as of late. I'm just going to kind of draw this in, just kind of eyeball it, maybe somewhere up here. There's a running gap as well as kind of a third type gap. But there you go. Money flow, incredibly strong. Look at the RSI, good case in point. So you're seeing strength that just is remaining there as well. So that is somewhat interesting to look at in terms of earnings. Now, I do have over here too. Let me go into my scan. In fact, I should just be able to pull it up right over here. By the way, oh, there was a question that came up. Let's see. Yes, I can share that. Was that Austin? Yeah, were you referring to this grid? This grid over here, I can absolutely do that. Yeah, think scripts aren't guaranteed for timeliness or accuracy. This isn't a think script, but I thought I'd just throw that in there anyways. But this is simply just I'll throw this in the chat box. This is just a slide, well, a grid chart with a bunch of different indicators associated with it. There you go. Okay, that is it. And for those of you watching on the recording, I will have that in the bottom of the description section. Okay, so that'll be there as well. All right. All right, let's do this. Oh, perfect. Oh, that's a better one. Rachel, NDXE. That's a shorter one. Equal weighted. So, um, yeah, that's for the NASDAQ. So we had another longer one, but that helps us there. But yeah, that shows it too. That's an easier one. So we'll be using that one going forward. Appreciate you putting that in the box. Uh, that's the one that wasn't doing so well was the NYA, right? That didn't quite get to where we wanted to be, which is interesting. Oops, sorry. Clicked on. By the way, when you click on those grid charts, watch out for that on demand. It's just overhead. Okay. A couple things to focus in on. Let's actually do sector analysis first before we go ahead and take a look at um, earnings. What's been moving in earnings. So this is a really, really short-term view of the sector performance relative strength. And we're just looking at the last 5 days just to see what was actually moving this week. You can see over here technology clearly leading the way pretty much across the board. I mean, it started on the low end over here and a portion of Monday, and you can see us moving up to Friday. So relative to SPX, which is what this line is, how is it performing relative to SPX? So SPX was basically up, but this was up even more. It was stronger than SPX. So this is looking at shorter term moves. I want to look at the longer term move. We'll span this out a little bit longer here in just a second. But what did underperform? Go ahead and choose red over here. So financials the whole week underperformed the market. So too did healthcare. And everything else was kind of flatter. Industrials was kind of flat to down, and so too is RE, real estate. And so was discretionary. In a sense, discretionary just up today. But there you go. Yeah, utilities was actually pretty strong. Yeah, and I would say materials was lagging. So this week was a little bit tricky. You have to say it was a week for communication services, utilities, and technology. Let's back it. Let's go into a 6 month from a week. And I realize that's a big difference. That's a big extension out, but now you can see where the strength has been at. Let's just say through April. So technology has actually held up very, very well. Think in terms of maybe, when you see trends like this, RE kind of seems, sort of sideways, maybe sort of flaggish. Same too with industrials and materials. Others, though, healthcare. Switch up some colors here. Healthcare, not showing good strength in April. In fact, really below a long-term read of relative strength, as you can see. Financials this week was another indication. That's why we like to look at it at a 1 week, because it can extend out to longer periods of time, like it's doing right there. Discretionary, maybe a bounce, but these can be helpful too. Okay, let's see. Yes, I'll put those in the link as well. Let me just share those with you guys so you have them too. Let me share both. I keep them in the description section of every one of these classes just so you have it too. But let's just share it and we'll put these in. I'll just type it in so you can distinguish because I have two of them here. So here's the 6 month. Oh, 6 month. relative strength. And here's the 1 week. Okay. I got to do the 1 week though. Let me get that one out here, go back to it and share. It's always helpful too to look at the charts as we dive on into those as well. The actual chart itself. Let's just get this out though. There you go, 1 week. There you go. Okay, here we go. Okay, so again, this will be if you're viewing this on the recording, I'll have this set up for you uh, down below the description so you can easily tap into that. Now, looking at the charts is interesting too. So here's just the grid of the chart. So that was relative strength, interesting. Now we're just looking at price data so you can see what's going on now. How could that potentially help us? Well, one thing you could say is, healthcare was down and down for 6 months breadth-wise. Could it find support here and bounce? Well, we don't know. We have to wait. I mean, it could, yeah, it could, but it's showing some weakness. On the other side, let's look at technology and communication services. Communication services first. I'll expand this so we can see it a little bit better. There we go. Full size grid. You can see over here, and this is where I wanted to focus in on today for potential trade examples. I'll get to it. We're almost there. But look at this up top. That is kind of flaggish when we're just looking at S&P 500 stocks that fit in with this industry. Big one here within that sector is Google. So it's just S&P 500 only. It could be a broader basket of stocks. We don't want to narrow it down, but I just want to let you know that that's what you're seeing here. Let me back it out a little bit. There's technology, same thing. So a lot of times when you get the RS, the relative strength, it's outperforming. When the RS is higher, it can be another indication that these sectors might be showing strength. Interestingly enough, what are you saying? What did we say? We said utilities could be an interesting area, and so too could, I mean, in terms of RS, our real estate as well, kind of breaking above some highs and maybe flagging. Other areas, you kind of need to watch it. I mean, discretionary, here's an example. It's flagging, but it was not showing nearly the strength, relatively speaking, compared to the S&P 500. So park that in the back of your minds. Let's move on over into stocks now so we can maybe be prepared for a few things that might be set to occur this next week as we move into next week here. Quick check on the calendar. We are in the midst of earnings. Again, you can get earnings set up right here in that little box, right? Whatever basket of stocks you want to look at, we're just focusing on the S&P 500 right now, but there you have it. And busy week? That was this week. Next week, this is so busy that you'll notice over here, it's not just one earnings announcement. That's a times 59 times 49 times 49 right there. So it's really busy next week. And so you might want to keep an eye on that. Now, um, having said that, let's get back to our regular charts because I did want to take a look at the earnings gap and go, what has been moving with earnings? And seeing what we have there. Let's just flip this golden cross for now. And I have so many of these, but there it is. Earnings gap and go that we built some of these in ThinkScript, but these guys, look at that. That's a list of companies. I want to just highlight some of these as we go through. This is, by the way, taken out of the S&P 500 as well. It's just a bigger basket of stocks. And sometimes I'll include the NASDAQ in there. I'm not sure if this one has that, but yeah, it's all lined up, ready to go. Let's take a look at it right now. So there you have, it did beat earnings, right? It was a negative 91, came in at negative 20 cents. That's somewhat interesting. I mean, the fact that it did, kind of gap and run a little bit. What I will do on these to kind of help me understand what has been moving like on the week, like in other words, it did, it's gap and it did like technically really go. It tended to move, is I might put in like a 1 month in here. Excuse me, not in 1 month, but maybe because this is just looking over the past week anyways. Gotta narrow this down real quick. I've got these in the ThinkScript class if you guys want to check those out. I can maybe put the link, well, I'll put the link in there for you to check it, take a look at them. Let's just do this, click OK. And now we're just looking at this over a 1 week time frame. And what does that performance look like? I'll just organize this. There are quite a few because we have a lot of earnings and we had a few earnings beats. This is an earnings gap and go, and we're really looking at earnings performance as well, beating earnings too. We'll give that just a second to load up. While I'm doing that, if you guys are getting value out of this discussion, uh, smash that like button or consider smashing that. I'm going to pull this up here too real quick just so I can highlight this for you. Let's slip this in. Be sure to give us a follow on Trader Talks as well. Here's a link to that. You guys are going to be getting this in the live class. But if you are not in the live class, then it'll be just go to Trader Talks on YouTube to pull it up and just type that in Trader Talks. You get a lot of good information in here. In fact, here are some of the playlists. You're going to get a lot of great stuff from Rachel. Teaches some great classes. There's a price patterns class. Encourage you to take a look at that. Um, let's see. A quick note: if you did want some of these additional codes, do that Ichimoku, if I'm saying that right. Scan. Let me just do this real quick. I'll just copy this link address if you want to take a look at it. But I've got the earnings gap and go in there as well. But this is just a real quick note. Let's see. Because it's just an easy way you can get those underneath. That's the playlist, anyways. You can get those underneath each of those YouTube videos. Okay. So with that, did it load up yet? No. It's still taking its time. That's crazy because it's not that long. What do I got? What do I need to do to narrow? Sometimes if it's taking a long time to load up, oh, that would do it. I've got it over here. I'll take, because that is a customized one. Okay, so let's take that out. Watch this. Does it load quicker? No. Uh, that's interesting. Applied volatility. If you ever run into it, that's what can be doing it. Still no. It's just slow. It's just generally slow. Tell you what, we'll just use what we've got thus far. What's been moving over here, BKR, there's an earnings gap. You're going to get a beat over there too. And it did run higher. It broke out. So, I mean, why would I be showing you guys this? Well, for one thing, is sometimes, not every time, but sometimes when a company does report a positive earnings number right there, sometimes uh, I'm assuming that was a positive. I'll have to double check it. But sometimes what'll happen is it might give some internal strength to the trend. And maybe there could be opportunities over here. That's a big move. And it's actually a three soldier up, I guess technically four, but like a candlestick pattern right there, breaking highs. And so what might traders be looking for? Well, maybe a flag pattern, something like that, or a series of smaller flags, whatever the case might be. But it can put structure to the trend where, I mean, it can, where prices can continue to run up higher. Ooh, gosh, Texas Instruments, yeah. Now we're talking like real strong. GE Vernova, strong trend continues, gap and go. Clearly. So just reviewing this week and maybe some of at the tail end of last week's earnings as we go through it, like Friday, that we couldn't do last week when we did it. So just keep an eye on these right here. There's MAS. Gosh, that's a huge jump to mass. Yeah. Um, Curry Dr. Pepper. That's kind of surprising. But I look, it has been having some earnings over here. How well did it do? Didn't beat by a ton, but that's some pretty good volume in there as well. Okay, just a few more to look at. You can see over there, DR Horton. It's sort of it's not like a perfect cup and handle, but it's sort of a rounded bottom down here. You're getting the gap in there, and sometimes at the end of that, you might get the handle in here. So again, as we've kind of talked about some of these swing trade setups that could be up for a rally. Now, again, it does depend on what the market does too, but the market does have some volume. We'll see what's going on. The Vertiv higher, and I'll let you guys, take a look at these. But here's one that's breaking out. This is an energy company. That's one that did beat earnings expectations by about, I guess, 12 cents or so. And energy right there. Now, what kind of energy is it, We'll see if that does flag or potentially move right there. But it is kind of coming right back down to that area here. There could be a larger flag at stake on something like this, and you can see that just by looking over on these longer term moves like this, right? And that's a longer term consolidation, but a lot of times how you might start to see it break out, start to get ready to go, is it's just taking out maybe the prior highs. So sometimes, not every time, but when a stock starts to break above 95 or get above 90, sometimes they are sucked up to 100. We don't know if we'll see that, but there's your 90. We are extending above that range. We did close above it, and this could be an interesting, just a little swing trade to take a look at too. So let's just put a little trade on here. Now, I'm going to just show you the extension of the longer term flag, which would be something over here off the bottom. Uh, there's kind of a lot of touch points right there. Let me do this. I'm going to extend this over here. It is a breakout. And we'll pull it up right there. Okay, to somewhere around this level. Now we can just do something like, we just do a smaller amount. It's just an example trade, how some traders might do this. Quick note though, just want to see what area. Okay, fundamentals. Oh, NEE is what it was. What? I said fundamentals. Oh, didn't go. For some reason I had to click it twice. Okay, so distribution, electric power. Okay, so electric power has really been in demand with AI as well. Kind of interesting. We don't know, how correlated that is, but anyways, there could be some macro drivers that traders could look at. Let's just put that trade in right now as an example trade, and I'll show you something here on that bracket order. Now, a quick note, because I don't think I saw these in the disclosure, so let me just something I would want to get added. But a quick note on the stop orders, since we're putting this in, is that stop orders, there's no guarantee that the execution of a stop order will be at or near the stop price. Okay, let's go. Not day order here, but good till cancel. And we'll just do let me go 50. Look it up. Okay. This one was much higher, like a 106. And this was lower. I'll adjust these if we can get the fill on it to a range that might make sense on these as an idea of how some traders could do it. But um, there's your order confirmation dialog entry screen. I'll go ahead and click on send right there. And let's take a look at our chart. There's the fill. Now, as we look at this, yeah, this is close to maybe the target range. I'll put it just maybe slightly below it. Again, this is the full flag pattern. Now, some traders do like a setup like this because it's been consolidating for a while, and that's really sideways. So it actually did a pretty good job of running up. I should say this. The pattern itself did a pretty good job of running higher and then going sideways. In other words, it held its gains pretty well, and so that could be an indication of potential strength, but we're clearly above that range where we go. Some traders still might want to give it some flexibility on the downside. So to give it some room. Now, so you might ask yourself, where would we be just like dead wrong on something like this? Well, maybe below. It depends on where you want to do this, but there are different ways to do it. I just below the low of the previous day. What we're so close to it on the same day, but the previous day right here. What does that look like for a potential risk reward relationship? It's very small here relative to the potential gain up here, right? It's probably greater than a 2 to 1. If we're talking about reward first, clearly, well, it's clearly greater than 2 to 1. I was going to say more like a 3 to 1, perhaps. Okay. A 3 to 1 reward risk relationship. If it were to hit this level, that's the full extension, of course, though, right? But you are looking at a breakout um, and seeing what could happen there. This is a segment of energy. Energy been kind of flagging a little bit more down, but this is well, we just didn't get the volatility, did we? Compared to, let's just say, for example, oil itself. That's quite a bit of volatility. We'll see. All right. The Straits of Hormuz are still closed, and That could lead, by the way, as we're looking at oil here, we talked about this last week, but it could lead to more inflation, which could ultimately impact earnings just from like a macro scale. So that's something to be mindful of. But the market is really kind of shrugging that off a bit. And technology has really been where there's been a lot of strength. We did this stock earlier in the week. This is a Caterpillar trade. We did the swing trade class that has been, oh, hang on a second, that has been getting close to uh, a target. As you can see over here, we've got a target range somewhere around here. For the small flag, there's a larger term flag. You can kind of see if I turn it into blue right here. I'll show you this. That's sometimes these are kind of closer. This one, I guess we were just very close to it. Anyways, that's one. That was industrials. Okay, I promise. The rest now are technology. So let's do this one here too. LRCX. So this is Lam Research. Now, Lam Research, in line with a lot of technology, has been quite strong. This too is a breakout, but we're actually getting the flag above the breakout. Now, it's not exactly a cheap stock either. We are post earnings, which a lot of traders will look at. We're kind of doing a bit of a shooting star here, and sometimes you can go sideways a little bit. But one way to maybe participate that some traders could look at in a rally like this is maybe selling a short put doing a short put vertical spread. Okay, but giving themselves maybe enough room. And let's look at the delta real quick. We'll finish up on something like this. But I'm just saying, some might look for the possibility of a move going higher, but to mix things up a little bit, see that 240? There could be some support in here if somebody was looking at just holding through. Uh, what do we have, like 20 days left in this month? So not a ton of time. Let's just get this going right now. Oh Lord, that's a lot of strikes. Okay, that's even more. Here we go. There's 40. That should do it. Yeah, there's our 240 right there. 240, let's see. The 240 is at that level. That's about a 22 delta. So a delta again is a measurement of a $1 increase in the underlying price of the stock. For every $1, it will influence this range by the amount of the delta. You say, well, that's kind of like not, it's the spreads. I mean, it's an expensive stock, but we can still look at it. It does have some open interest associated with it. Let's just see what it looks like over here. Selling the 240, buying the 235. So a five wide, you're getting a credit of $1.40 as it stands right now. If we do a comparison on this, let's just take a look at it right now. So the total risk is 360. Credit 140 as it stands right now. What does that look like? Let's pull it up. What does that relationship percentage-wise look like? Here's our 140 divided, sorry, 140 divided by 360. That didn't work. 140 divided by, what's the ratio, the relationship there? About 38, 39 approximately, right? Relative to the max loss. Let's send that through. Okay. So that is one that maybe some traders would look at. They're saying, hey, I don't know, but if it continues to go sideways, or even if it does go up, traders are really looking for prices to hold above, although you can get assigned at any time on a short option. Traders are really looking for prices to hold above 240. So really a move to the upside or sideways, or even a little bit down could create a max profit on a trade like this as you are potentially waiting. Now, lastly, I promise this is lastly because we're almost out of time, but this is Google, and Google is similar because a lot of companies have kind of run already, but these companies have not. Now they still fit into that technology area, so it could sort of bleed over into these. They might just kind of be laggards in the group because they still do have pretty strong technical kind of setups. I mean, there you go. Flag pattern right near those highs. So keep that in mind. As this one too is just like today, just inching above here. The difference between Lam Research and Google is that right there, earnings. And this is where too some traders would look for some of the sort of spread trades as well. But I wanted to throw a stock trade in and an option trade in today. Folks, if you got value out of this discussion, smash that like button. Let's Rachel and I know that we did provide value in our discussion. I do appreciate Rachel being here today. So much for your help in the chat, as well as each of you folks. We did make it. We made it to the end of the week. Another volatile week, but yeah, here we go. So hopefully we give you some ideas of companies to look at. Earnings, a lot of earnings coming out, and earnings could actually play a key role too in what we might see in the market as well. Corporate earnings could play a huge role. Some of those earnings have been quite positive too. So keep an eye on that. Great to be with you. Look forward to future discussions. Take care, all.